All right, welcome back, everybody. CNBC has learned that OpenAI is allowing employees to sell roughly $1.5 billion worth of shares in a new tender offer to SoftBank. That allows SoftBank to take a larger stake in the AI startup, and it enables current and former OpenAI employees to cash out their shares. Sources tell CNBC that SoftBank CEO Masasan was persistent in asking for a larger stake in the startup after investing $500 million in OpenAI's last funding round. CNBC's Kate Rooney broke this story, and she's going to join us in the 8 o'clock story with more on what she's hearing.
It's really interesting, Becky, because, you know, there's part of you, if you're running a company like this, that you'd want to allow your employees to get out, or at least to be able to sell some shares at these remarkable valuations. But there's part of you that I would imagine would want to keep your employees in this. There's been a whole number of rounds where a lot of employees have been able to sell over time, and I just wonder what that's done, because it's sort of shifted the game of actually ever having to go public, frankly.
Right. It's the waiting for Godot, though. You can't keep your employees waiting for forever for these things. But who were we speaking to just last week, Andrew? Somebody was talking about how his biggest concern was at NVIDIA was the idea that the employees there have made so much money on their shares that they don't have to stick around. That, you know, finding talent is the hardest thing to do, and keeping that talent in place, which is kind of an interesting perspective on this. You've watched it with companies like Amazon, Microsoft, all along the way. If you can get out in the market, you're really only holding on to the employees that really are doing this because they love it.
So that's the good, right. On one side, that's the good news. But the other is, I think in the old days, and maybe I'm wrong, I think the folks who, you had to wait until the company went public typically to get out. And so there was a sort of incentive to stay. Now, maybe that was the wrong incentive. So maybe you only want the folks who really genuinely
bad news for the shareholders who just buy in at the opening. Like if you've got a whole base of employees who have been waiting around, and as soon as the IPO takes place and they can then sell their stock at some point, maybe they're all out the door. Maybe this is a gradual way to weed out people who aren't in it for the love of doing it, who are here to make money. But it's a tough thing to keep people employed. You got to wonder for everybody, would you stay if you didn't need to, if you didn't need the money?
It's a good question. By the way, a similar question, but in a different way, which gets us to our next story this morning, because many Starbucks corporate employees are only going to be getting 60% of their overall bonuses for the most recent fiscal year. Some of them get that partially in stock due to the coffee chain's poor performance. That's according to a Bloomberg report that says that the weaker than expected results dragging down the overall payout for many workers who met their personal goals. So it's interesting, right? On one side, you meet your personal goal, and the other side, the company doesn't. The report also said that senior executives and the executive management team won't be getting what's called merit raises, but workers in other positions will. So again, creating some interesting dynamics when things aren't going as well as hoped.
It's the way it's supposed to work, though, right?
I mean,
it's the way it's supposed to work. If you are offered bonuses and incentives on the company doing well that's aligned with shareholders don't do well, you're not going to do as well either. I mean, I guess some people look at bonuses as an automatic, but bonuses are there for a reason, and it's got to be tied to incentives. And if you hit your personal bonuses, that's a harder thing. I mean, those people should probably get merit raises that come through with it. But bonuses, the way most of them are tied, especially for upper executives, is tied to the performance that ties them to the shareholders.
No. For the upper executives, there's no question. But there's always this question about, what's the ratio of, sometimes it's a third. It's like your personal performance. It's like your unit's performance, and then it's the company's performance.
Maybe it is. If they're getting 60%, maybe they hit 2/3 of it.
Bunch of ways to do it. So, but it's an interesting development. So we'll see. We'll see. And hopefully Brian Nichols is going to be turning this thing around, and hopefully there'll be a better Christmas in 2025 for the Starbucks folks.